How's it going, everyone, and welcome back to another video on the channel. Now today is another chart video and I'm going to be showing you exactly how I get bias and how you can use basically only structure if you wanted to trade and make good profit. Now, as you know, I love my structure, I love trading structure and using it, so I feel like I'm quite well to talk on this because I've used it a lot, I've back tested a lot, and it's something that I use in my actual trading strategy. So I thought, why not try and spread the word, show people what I'm doing. It may seem very basic, but putting it into action is a bit harder, so I'm gonna have some tips for that. Make sure to stay at the end of the video to find out the most important thing that I feel there is with structure that most people don't really talk about. I also wanted to say I'm sorry for the lack of uploads. It's been a very busy week. That's why you only had one video last week or something like that, or it's been a week since the last video. That won't happen again. I do apologize, but I'm not going to waste any more of your time. We're going to jump onto the charts and I'm going to show you exactly what I do and how to do it the best way so that you can make the most amount of money. Obviously, if you do want to find out fully how I trade and my full strategy, there is a link to my Telegram in the description. You don't have to check it out, but feel free if you feel like it's something that will help you and your trading and you like what I teach on this channel. Okay, so as you can see, we're on GU, which is my bread and butter, so to speak. And I'm going to be talking through exactly how I use structure to get bias and how you can use it to literally only trade off. Because if you get structure right and you get the direction right, then you are going to be, correct most of the time. And I will have some clips throughout the video showing you how I've used literally just structure to, for example, flip a small account, for example. But we'll start on GU and then we're going to go to gold because I know a lot of you like and trade gold. But let's start with GU. So highs and lows is the basic principle of structure, is the most important part of structure. But determining ultimately what a high or low is can be done by many different ways, by many different people. Now, as I'm looking at GU right now, there would be a sell opportunity on structure, and I'd probably look to sell maybe around this area, something like this, with a 10 pip SL and then a 1 to 3, so maybe something like that. But I'm not going to take it because it's New York, but that would be something, for example, that I might look for. But I'm literally just editing the video now, and I just wanted to show you, as you can see, I said GU would sell. It literally just missed the area, but obviously, I wouldn't have taken it anyway. But I said it would sell, and lo and behold, it sold. I told you it was sort of a given, really. So yeah, not surprised that it did that. But I just wanted to show you that when I say it sells, and you use the structure like I teach, it does work. And with gold, I said it would have sold from around here or something, I think. And lo and behold, it is selling and will probably continue to sell as well. But yeah, I just wanted to show you that it did play out how I said it would. How would I know that it's even going to sell when I see, what we're looking at? Because on a higher time frame, for example, if I go to the hour, we've broken the highs, we're bullish. This is a pullback to maybe go longer. So how do I do it? How do I get it right a lot of the time? Well, on the 15-minute, what do I see? And this is what you need to look for every time you want to determine bias on one time frame, because that's all you need. So you can see that we have this low that's pushed up, that's broken this high, that was, a previous high because it broke this high here. And obviously this is the important low here. Why is this the important low? Because it's the one that pushed up and broke the sort of major previous high. So that's what we're looking for. But now what has happened is, actually what I'll do is I'll leave this sell here just to see if it actually plays out whilst I yap. So we'll look for something like that. But why would I sell here? So the reason is because the low that broke the previous high has just been broken. But not only that, this low here has also been broken. So we broke 2 times to the downside. And so from that alone, that would be enough for me to look at selling. And in terms of, targets and TPs and things like that, well, it would be a case of, you could do a fixed risk reward, or you could look at, liquidity here. You could look at liquidity here. You could look at liquidity all the way down here. It doesn't really matter. It's just on your style of trading. But this is, as I said, is purely about structure. But as you can see, that's how I would gauge that it would sell, because we had the low get broken through, and this low also get broken through. And the reason why these are important lows is because this low made this high and this low made this high, both of which broke structure. So that's why they're important highs and lows. And I want you to bear this in mind, because a lot of people will get caught up in random things like this. For example, people will look at this and say, this is, for example, an important high, because it's obviously pushed up, come down, pushed up. But it isn't an important high. Why is it not an important high? Because when price came down, it failed to break the low. And actually, the important high is this one here. And then that was the push down that broke the low of this place and this place. And as you can see, the trend reverses once this high gets broken, retests into it, and then pushes. And so, as I said, with this sell here, or potential sell, that's the same concept as why I think it will sell here, just reversed in buy format. And so this is what I want you to sort of look at and remember. Obviously, this doesn't apply for news. News can be a bit mental. For example, FOMC here yesterday isn't exactly going to work well, but this will definitely sell. Obviously, the entry could be up to you. People enter lots of different ways. I just put the entry a bit random, but the main point is it will sell to the downside, hopefully. Otherwise, it'll be a bit awkward if it doesn't. But that's sort of what I'm looking at now. That's kind of, that's what I'm looking at. So remember your highs and remember your lows, and remember what makes a high and a low and a break of structure, as I've just told you. Now, another thing that people mess up with on structure is they rush into it. So, for example, people will see a push down, a push up, a push down, a push up, and they will try and sell here. Their main reason may be that it failed to break the high. Now, yes, this is logical, but it isn't sensible, because right now we've not broken a low. So we're essentially consolidating if we kept doing that, but we're still bullish, because although we failed to break the high, we haven't broken the low, and price could very easily sit around and then punch straight through it, because it was just gaining what we like to call liquidity, as you probably know. So you need to wait for a break to the downside if you want to sell at a high, and you need to wait for a break to the upside if you're trying to buy at a low. If you don't do that for either of those, then obviously it's gonna mess you up. Now, what I'm showing you and what I'm explaining to you here obviously doesn't have an 100% win rate. Sometimes the market just doesn't stick to structure and does what it wants. So don't let me fool you or convince you that this is a foolproof way of trading. And this is by no means all you should use when trading. Obviously, you need to have entry criteria, risk management, things like that. But what I'm trying to show you is, in terms of getting bias and even trading, if it was like a flip account and you didn't have time to do all this analysis, purely using structure is enough. Like, it is enough. And I'm going to show you another, things on gold here. For example, the sells that I caught here on a small account that I was flipping. I'll put the video in now. All right, so we're in the next sell again. Ignore the monitor, but this is the next sell that we're doing on gold on this account, and it's currently up $6, $7, $8 or whatever, and we are targeting the lows down here. So we want to break this low, and we may be able to get a re-entry, to be fair, if we break this low. But let's see if it happens. I think this will be like another $30, $40 this trade. Bring the account up quite nicely. So yeah, But again, it was the same thing where we have a high, a low, a high that failed to break, but instead of just entering here because it could have then gone like that, we waited for the low to break. Once we broke the low, obviously you want to sell high, buy low. So if you're not using any entry criteria and you just want to take a trade, you need to obviously wait for it to come into a valid area. But that is something you need to work out. Obviously, I have my entry models. If you want to learn that, as I said, link to my Telegram or whatever. But that's another example where you want to just sell where it makes sense. Same again here. You wouldn't want to sell till it gets into like this area now. Why is that? Well, as I was showing you on one time frame, prices came down, created a low, pushed up, and what's it done? It's failed to break the high. It's then came down, made a low, and then came up. But we haven't broken a low. So there is no reason to sell yet until we have that big drop down. However, if price had failed to break the high here, like so, and then we have this low here and it had come down and broken the low, then yes, a sell there would have made sense. So if this low here came down to here, it would make sense to sell, but it didn't, so there was no point in doing so. So it's about timing it right and looking at really where you want to buy and sell, and only using one time frame, because I said on the hour it can get complicated. You can still kind of see it play out. It's just not as clean, where you have the low that made the high and then we've just broken that low. So you can kind of see it still playing out, but it is harder to see. That's why I prefer the 15-minute. But you know, there isn't really any invalid reason why it wouldn't sell. It should sell, and I believe it will. But hopefully either way you found this video useful. And if you do have any questions, feel free to DM me on Instagram or put a comment, because I do always reply. But either way, I hope you guys enjoyed this video. Don't forget to subscribe, and I will see you in the next one.